Let's talk about insurance. So the question I often ask my clients is, how would your family pay the bills that you have to pay on a monthly basis if you and or your partner got sick or suddenly died? And that's where insurance come into play. In the simplest terms, there's three key needs for insurance. So debt repayment, how would your family continue paying the mortgage, the credit cards, the lines of credit, should something happen to either one of you? So in here, you would just total up how much debt you have. So let's say you have a mortgage of, $400,000. That space or that number would go into the debt repayment piece when we're looking at figuring out how much insurance you require. Income replacement. How will your family survive if you can't work or if you're not here and are able to contribute with a monthly or a paycheck? And the last need of insurance is from estate planning purposes. Insurance is a phenomenal tool to minimize the taxes and probate fees that are affiliated with passing on your estate to the next generation. When it comes to life insurance, so again, life insurance has to do with providing coverage in case of death. We have three different types of insurances available out there. We have term insurance, which is essentially insurance for a fixed amount for a fixed period of time at a fixed cost. It doesn't have any investment vehicles. It's just straightforward insurance. It usually is in a form of term 10, term 20, term 25, term 60 to age 65. And you can purchase it in a, $100,000, $50,000, $300,000. There's really no limit to that. Whole life insurance and universal life insurance are both insurance platforms or insurance products that are permanent, meaning they will not expire and they just have different structure to them. Whole life insurance essentially provides you with a bit of a savings from every premium, and those savings are managed by the insurance company, and you have a bit of a cash value that gets built up into the policy. Depending on the type of whole life policy, at some point, if you choose to stop paying into the insurance, you have a reduced amount you can keep in force, or you have a certain amount of cash that you will receive if you cancel the policy. With universal life, it's also a permanent insurance coverage. The biggest difference, you have control of the investments or the savings component from every premium you make. So you and the insurance advisor that you work with have a lot more control in terms of the investment vehicles. I think the other key thing on universal life, it is creditor protection. It provides creditor protection should there be some kind of a bankruptcy. So in the case of a bankruptcy, especially if you're self-employed or own a business, your debtors or who you owe money to cannot touch the insurance policy if you have a universal life insurance policy. Critical illness insurance is a type of insurance that provides you with a lump sum payment should you be diagnosed with a condition that is actually set out in the policy. So the most common ones are things like cancer, stroke, and heart attack. And some of the policies include that, and some of the policies include a whole list of different illnesses. But it essentially is a lump sum payment. And then you and your family can decide how you're going to spend that money, whether you need to retrofit the house, whether you need to spend it on alternative medication for cancer treatments, whatever you choose to spend that on. And lastly, disability insurance. Disability insurance provides you with a payment on a monthly basis that's a percentage of your current earnings. Most of you that work with a company that have extended benefits would have some kind of level of disability coverage through your benefits. If you're self-employed, you can certainly get disability coverage for yourself as well. And again, I like looking at statistics. So how are Canadians insured? And if you take a look at it, a good percentage of Canadians have life insurance, whether it's through work or individually. But I think not enough of us have things like critical illness insurance. And disability insurance, most of us own it through our group benefits. But if you're self-employed or run your own company, only 21% of us personally owned disability insurance. So I think we need to really take a look at it. Do we need it? So going back to the question, how will my family survive if I am ill or if I'm not here to bring in the paycheck? And here's a quick example. So let's take a look at John and Rachel. They're 42 years old, a couple of 2 young children. They're non-smokers. And let's take a look at how expensive is it to get some coverage. So in their case, their incomes are about $60,000. So here's a quote for $700,000 of term 20, meaning they have $700,000 of life insurance that's going to get paid to their family each. And it's fixed for the next 20 years. So their cost is fixed and the coverage is fixed. On top of that, this quote includes $50,000 of term 20 critical illness insurance for each of them. Total cost for them to provide themselves with that amount of coverage which is about $700,000 each plus $50,000 of critical illness is about $200 a month, or $209 a month to be precise. So again, going back to the question, how would my family survive? If you expend, in this particular example, $200, you could have a complete peace of mind that your family would be okay. Heaven forbid something happens to you, because not only do you have critical illness coverage, you also have insurance, a life insurance coverage.